Welcome to day 4. Today has a little bit of math and might be a little confusing, but once you start doing it on the charts, it'll all make sense. Today is about measuring what really matters, your pips and your lot size. And by the end of this lesson, you'll know exactly how to calculate your profit and loss. Now don't worry, there are calculators, so just follow along and grab the concept for now. So first, what is a pip? Well, a pip is a unit of measurement, like inches or centimeters, but for price movement. In Forex, we use it to track how far price has moved, and that distance measures your gain or your loss. So in everyday life, we're used to using 2 decimal places, like dollars and cents. So 1.43 means $1.43. Pretty simple. Now in Forex, we zoom in a little further. So that 4th decimal place is what we call the pip. Now it might seem tiny, but with the right lot size, even a 1 pip move can be worth a lot. So if price moves from 1.4321 to 1.4320, that's a 1 pip drop. The movement is small, but the value per pip is what determines what you actually made or lost. Now for yen pairs, like US dollar, JPY, or Japanese yen, we only use 2 decimal places. Same concept, just fewer digits. Now that extra 5th decimal place, that's a pipette, or 1/10 of a pip. And we don't use pipettes when calculating profits, but they are useful for fine-tuning your entries and your exits. Now, pips tell you how far prices moved. Lot size tells you how much money each pip is worth. So a micro lot is worth 10 cents per pip, a mini lot is $1 per pip, and a standard lot is worth $10 per pip. So if price moves 10 pips and you're trading a micro lot, you made $1. $10 on the mini lot, $100 on the standard lot. It's the same move and completely different outcomes. Now, the formula is pips times lot size equals your profit or loss. So for instance, if you're trading a mini lot, if you're trading a mini lot at $1 a pip and it moves 33 pips, you made $33. But if you're trading 7 mini lots and it's worth $7 a pip, and you went 33 pips, well then you made $231. So same distance, 2 totally different results. Lot size is where traders get emotional. Trade too big and a small move can wipe your trade out. A starting rule is to risk no more than 2% of your account per trade. So always ask yourself, how much am I okay losing if this trade doesn't go my way? So now the question everyone asks me is, how much money do I need? Well, let's do some math. If you risk 2% per trade and use a 20 pip stop loss, if you're trading a micro lot, you need a $100 account. If you're trading a mini lot, that's a $1,000 account, and on a standard lot, you'd want a $10,000 account. Now, this is just a guide. You can adjust with smaller lot sizes or tighter stops. So for now, we're going to practice this. We're going to open a demo account, and we're going to use the ruler tool in TradingView to measure different pips. We are also going to set up a practice account and place demo trades at different lot sizes so you can feel the difference of different lots and pip movements without risking any real money. All right, open TradingView, and we'll see you in the charts.